In the 1970s, America faced one of the most turbulent economic decades in modern history. Inflation soared, growth stalled, and confidence in the US dollar, once seen as unshakable, began to crumble. It was a period when gas lines stretched for miles, mortgage rates hit double digits, and families saw their purchasing power shrink month after month. But in the middle of that storm, one asset quietly rose from the shadows to become a symbol of stability: gold. And just like then, gold is once again capturing the world's attention today. For decades, the value of the dollar was tied to gold. Every US dollar in circulation could, in theory, be exchanged for a fixed amount of gold, $35 per ounce. This system, known as the Bretton Woods Agreement, was designed to bring order to global finance after World War II. But by the late 1960s, America's spending on war and social programs had ballooned, and foreign countries began demanding gold in exchange for their dollars. In 1971, President Richard Nixon made a fateful decision. He ended the convertibility of the US dollar to gold. That single act, known as the Nixon shock, untethered the global monetary system from its golden anchor. Almost overnight, gold was set free to trade on the open market. What followed was a decade of financial volatility and a powerful reminder of gold's enduring role as a store of value. The 1970s brought a perfect storm. 2 oil embargoes sent energy prices soaring. Inflation climbed above 10%, eroding wages and savings. Stocks struggled, bonds lost real value, and for the first time in generations, Americans questioned whether their money was safe. In that climate, gold became a refuge. From 1971 to 1980, its price exploded from $35 to over $800 an ounce, a gain of more than 2,000%. Investors around the world turned to gold as a hedge against both inflation and political uncertainty. By the end of the decade, the Federal Reserve, under Chairman Paul Volcker, took drastic action. He raised interest rates to over 20%, pushing the economy into a short recession, but he succeeded in taming inflation. His policies restored faith in the dollar and marked the beginning of a new economic era, one that would fuel 2 decades of growth. Fast forward to today, and history feels like it's echoing once again. After years of easy money and global debt expansion, inflation has re-emerged as a major concern. Geopolitical tensions, shifting trade alliances, and questions about fiscal stability have driven investors back toward what they trust most: gold. In recent weeks, gold has surged above $4,000 an ounce, breaking new records. Central banks from China to India are accumulating gold reserves, diversifying away from the US dollar. Meanwhile, investors see it not just as a commodity, but as a signal, a reflection of uncertainty in global markets and monetary policy. The same emotions that drove investors in the 1970s, fear, caution, and the search for safety, are resurfacing in a modern context. Technology has changed. Markets have evolved, but human behavior remains the same. At El Castillo Investments, we look at gold not simply as a trade, but as a teacher. It tells the story of human confidence, how it's built, lost, and regained. The lesson from the 1970s isn't just that gold shines in times of uncertainty, it's that discipline and strategy matter even more when fear dominates. Gold may rise and fall, but true wealth is built by balancing protection with opportunity. Whether it's 1979 or 2025, the principles remain timeless. Stay diversified, stay informed, and never let emotion replace strategy. Because in every era of uncertainty, wisdom is the most valuable asset of all. Visit elcastilloinvestments.com to learn more and follow us to more financial insights.